Hey guys, today is September the 18th of 2016, and I want to go over WD Gann time cycles. The last video I did in regards to what I recommended newbies start learning and start, practicing and researching was time itself and time cycles. So I want to go ahead and do a little video of some of the techniques I use and do, and maybe this could give you an insight on your research and could lead you to other things. There's a quote from Albert Einstein, theoretical physicist, and I find it amusing and also fascinating. The only reason for time is so that everything doesn't happen at once. Einstein. Time cycles. This is what W. Gann says. How do I forecast future cycles? You may ask. In order to forecast future cycles, the most important thing is to begin right. For if we have the right beginning, we will get the right ending. If we know the cause of the effect, then there can be no doubt about predicting the future event or effect. A couple of things stand out at me right here. The most important thing is to begin right. And then the next thing that jumps out at me is if we know the cause of the effect, and important thing is to begin right. Which here's an example. There's a few that believe that, the first trading day of an instrument is the beginning of the right. So I'll show you a few things that are important. This is Facebook. One thing you want to, in your research and tracking time, is the important date will be the first day that the instrument trades, which is 5/18 of 2012. And the time. There's two things about the time. One group of Gannists believe that the first transaction that happens once it goes on board on the market is the important one. And then there's other Gannists that believe, no, there's really transaction going on in the background, so you should really start the open of the market of that day. So start tracking everything from 9:30, even though Facebook hasn't opened till like maybe sometime in the afternoon or 11 something. So those are the two schools of thought. You could use either or. You could use the 9:30 open of 5/18 of 2012, or the actual first price when it opened, which was $42.05. The next thing you want to do is the actual action of the first candle. My mentor taught me that the on the first trading day candle, there's a lot of DNA encoded within this Facebook, and could help you indicate and forecast future support and resistance just by this candle right here. So for that case, then the open is important, the high of that candle, which is the 45, the low, which is $38, and the close of 38 point, I think is 23 cents, is important also. The next thing is important with tracking the beginning, getting the beginning right, will be that first impulse. There's a lot of information encoded in there too with that first leg going down all the way to 6/6 of 2012. And then not that important, but important, equally important, will be the leg down. 1, 2, 3. The three move here will be important, but the most important too is also, or lastly, should I say, is the low of the chart, which would be 9/4/2012. So going in importance, the date that the instrument first traded, and I'll let you decide either the 9:30 or the actual transaction that first hits the market. The first candle, the action there, and the first impulse, and then lastly will be the low. With those three information there, you could with calculations and all kinds of stuff that I won't get into because this is not the video for it. You could determine where this thing is heading and how far and where will it go. I'm going to continue. Just wanted to show you that as an example. As the important thing is to begin right, and if we have the right beginning, we will get the right ending. If we know the cause of the effect, then there can be no doubt about predicting future events. I'm going to dive into the cause of the effect. And he goes on in time cycles. He says, in making my calculations on the stock market or any future event, I get the past history and find out what cycles we are in, and then predict the curve for the future, which is a repetition of the past market's movements. The great law of vibration is based on like producing like. We're going to go now to the pound dollar. I'm going to try to make this video short, but precise, so like that you kind of, I'm not going to show you everything in regards to time. I got to leave some stuff up to you so you guys can figure it out and trial and error and research and dig and get your investigation hats on. But I'm going to show you a little few things that you could use to get you going in the right start and help you in your trading. First would be time cycles. I'm assuming most of you have, and I know a lot of them have it, is cycle brackets or arc cycles from point A to point B. The first thing you want to do, and if you don't, you should probably get a better broker or better trading platform. First thing you want to do is take the high, and I'm using the pound, the 715 high. This is just using time cycles. Take that right there, click on it, and take the next high that the pound did, which was 618. Click on that. You're going to leave it red. Mine default to red because it's going to show you as resistance. So into the future, if we put this high here and you're trying to see where this a possible high could be, would probably be right here. And remember, I said possible because nothing's written in stone. This doesn't have to be another high here, because if you look into the future, it didn't make another high. It kind of went sideways here, but it actually made a high right here on the 24th. So this one in theory said, 524 we're going to probably make a high, but a month later it made the high. So look at that. That's interesting right there. So anyway, so that's an example, and in the future there could be a possible high set right here for 424ish around there for a possible top. Then the next thing you want to do, let's get a little closer. You want to take this high, which is the 618, and click it right here with the 624, and that would be your other high. And into the future, you'll see that maybe it could be somewhere around June 30th, around there. So you go from top to top. Then the next thing you would do is go from bottom to bottom. So we're taking the 7.9 low. Let's get a little closer here. 7.9 low right here. Click on that and take this low, which is 413. And we're going to color this green. If you have the option to, I recommend you do it, because having a bunch of these circles, time cycles, could get confusing, and you don't know what it relates to, because they all kind of could get a little messy and crazy. So I color green for support, because there was a low here, and then we made another low here, and then you go into the future and see where it could be a possible low. So from this low to this low, then we're probably going to be looking at something like somewhere around the 10th, the 9th, around there, that week of January of 2017. Could be a possible low. Could take this out, chop around, and maybe put a low here. The next thing you want to do is highlight the cycle again. Take this 413 low and pick this February 29th low right there, and then color that green also, because that's support. And these are going by past pivot swings low. So that's green, right? And then you look into the future, you see that you got what I call a cluster. You got from two different swing pivot points showing that there could be something significant here of that first week of January. So that you want to keep an eye and track on. And so you got the highs, you got the lows, and then lastly, what you want to do, and you can see that I didn't pick this one because this actually could be broken. So right now, this is kind of current. So we're going to see if this low holds. If it holds, then maybe we could start trending higher. I'm kind of leaning that could hold, but you never know. I've been wrong in the past. So we'll see. Time will tell if that's the low or not. So the next thing you want to do is take the low here, the ninth, and go to the top of the 15th. Do I have it right there? There you go. Nope, I didn't get it. The 15th. This one you color another color. This is more like the swings that the instrument do. So I could color it maybe like blue or whatever. And you have that there. So from here to here, that was the cycle. So let's look in the future what would happen if we were just trying to find it from here. You can see that here, nothing really happened. It became a dud. And you'll come across this on Gann Analyst, on doing analysis with Gann techniques. That sometimes they work, sometimes it doesn't. Through the time and experience I've been trading, I've noticed that there's other factors of the forces. I call it variables that are more in control and leading in price action. So this cycle here didn't have much effect. If you go into the future, let's go right here. You can see that there was a cycle low somewhere around 21st around here. And there was a low, the 7.576. So does it correspond with that? I don't know. We'll see. There's the next one coming up in the future. Or it'll be July 21st. So we'll see how it pans out. So you continue doing that. And then you do one from like here to here. Another swing low from here to here. From here to here. From here to here. And color them all blue. And from here to here. And that way you distinguish. I don't want to do it right now because I don't want to waste time, but you get the picture, and you have that as blue as the swing points from point A to point B on swing pivots. And if you look, if you do all that, you'll kind of see what cycles or where things could, possibly change on the bigger, time frame, not these little fractal ones, on the bigger ones. So the bigger ones will probably be here, and if you do the ones with the blue, on all those other points, you might probably see something show up here, whatever of importance or clusters, and sort of like that. So that's that on the, excuse me, on cycles. Let's hide that, and let's continue. I think that was it for here. Let's see. Gann continues, I have always looked for causes, and once I determine a cause, I can always be sure of the effect or future event which I predict. It is not my aim to explain the cause of the cycles. The general public is not yet ready for it and probably will not understand or believe it if I explained it. So one, Gann was not going to reveal his secret. Two, if he were to reveal his secret, everyone in this planet would have been calling him nuts. One would not understand it, and then second wouldn't even believe it, even if he just shows proof of evidence of it. So he was not going to do neither. But the key that I see here is I have always looked for the causes. The causes is what interests me in regards to the time cycle, trying to find the cause. And there's different ways of finding it. And what I'm going to show you right now is mostly more on the price and time of the chart using time and using the price. As you can see, the pound did a high of 715. This is the time. That's the high. And it went low on 413 at 145.64. And this is the seconds. This is the minutes, the hours, the days it took, the weeks, the month, the years. And within the 365 days, this is the percentage of that move. And From the low of 413 to 618, I'm just going to go over these 3 swing points on how I go about doing some calculations, but I just don't use this alone. I use other stuff to confirm things. So I'm just kind of giving you an insight how I would use time and price in this aspect. 618, we put a high, and this is the time that it did to the minute. And this is the high, and this is the second it took in minutes, hours, days, weeks, months, years, and a percentage from this low to this high. First thing I would do, I would square the dates. The date would be 7/15/2014. That's the high. I'll take the squaring of that date and use the cycle of 17 to get a date range between 3/28 and 4/30 of 2015. So roughly, it's like a ballpark. If there's going to be a possible low, it's going to be somewhere around here. There's other ways of calculations and techniques that Gann did that would pinpoint it to the date. And I'm assuming he probably gotten that far in her calculations to pinpoint it even to the exact hour or minute. This is just a range of where it could be the possible low from 715, just using the date and squaring the date with cycles of 17. Once you get to that low of 413 and it's a respected swing low, you will use this date to square the date right here of a 413 of a cycle of 9, and you will get a range between 616 and 73 of 2015 to find a possible high. Same thing here on regards to price, and that's just on the date where it could be the possible low. In regards of where it could be the possible price range low, you will use cycles in price. So the high cycle price you would use is the 1719. You would use a cycle of 10, and that low was 145.64. So using the cycle of 10 within the cycle price of the 1790, you'll get a range between 146.67 and 142.26. So that would be your range. Once you get that low, which is the 14, and you want to find out the high of the 18th, you will take through the 145.64, and you use the cycle of 5, and this was the actual high. And that cycle of 5 within the cycle price itself will give you a range of 1579.5 and 16048, that range. So now let's look at the chart and see how that all looks. Let's go over here and let's put my drawings. I did some of this already, so let's just do the rectangle. So right here is the green. This would be the range of where there could be a possible low, and that's not using Astro. This is just mathematics and scoring the price. You can see that from here, if this was a respected high, then you could determine that it could be a possibility that the low could be within this range, and it got this range right here, and it ended up somewhere around here, 164. What is it? 165.64. And then the gray one is where it could be the possible range within the dates. So this is price and this is dates. So somewhere between March 28th all the way to April 30th, there could be a possible low. Once you put the trend lines, time levels, you can see right here, these are the ranges. The same thing for the top, and for price action, possible top right here. Where am I? There we go. And you can see, let's see, show trend lines right here. And this is just using price and time together right here. From right here to here, 413, it took 272 days, 193 bars, minus 15.27% of the downside. From this low to this high, it took 66 days, 49 bars. So days are calendar days, bars are trading days, and it was a positive move of 9.36. And from the top to top was 338 days and 241 bars or trading days. And if you can see on the times from the high to low to high, these are all the seconds, hours, days. There's a lot of stuff here encoded that if you have a good eye and you're a researcher and detective, you can see some correlations within this and this chart right here. So to sum it up, score the date from the high, cycle of 17 will give you a range. It doesn't give you the exact date, it just gives you a possibility worse. And you just look at price action to see if it's going to happen. If it doesn't, it'll just continue going lower, and then these calculations are void. From the low, you take the low, which was 145.64, square that date, and the cycle of 9 will give you this range of 616 all the way to 73, which that reflects these blue lines. This is where the possible low will be. Within the price cycles, you can see that the high of 1790, you do a cycle of 10 within that price, and you get a range of 1467, 1466.7, and 1422.6 within that range, and that is the color green right here, where could be a possible low in price. Same thing here. You take the low of the 14th, 14.564, and you do a cycle of 5, and this is the range you get, anywhere between 15.795 and 16048, which is the green right here. And I just wanted to show you this right here. You could do this technique going there. Now, one thing I haven't shown you is how I get these cycles. I can't show you everything, but I could tell you that if you research and study and look deep into things, you could figure it out. If I'm going to do anything, I'll take Gann's approach. I'll be very cryptic myself, but the truth is out there. You just got to find it out for yourself. What has been will be again. What has been done will be done again. There is nothing new under the sun. Ecclesiastes 1:9. Study, research, everything that you need is here, encoded within price and time for you to determine the future. Backtest, look. Remember my first video, study time. Study why from here we put a high to a low, why from this low we put a high here, and just keep moving forward in time and just study why these points in time they stop, and why is it resistance and why is it support. And the more you study and the more you research and the more you look at these things, the more things will seem to make sense slowly. It won't happen overnight, but the more you look at it and see it, the more it will make sense to you. Hope this video helps, and I'll keep you posted on more thoughts on time and cycles.